Hello traders, welcome here to our new webinar. Sorry to be a bit late. I'm behind for a minute or so, had some issues with my software today. Hope everything will run smoothly. Before we can start, just let me know if everything is fine. Erso is here, Brian is here. Let me check who else. Sayed is here, Anis is here. We have Junior Arevalo from Venezuela. Very nice. So we have people joining in from globally actually, so which is very nice. That's why we have actually webinar at this time of the day, because that's how we cross the European and the US sessions. So looks like that we are good to go. Let me bring my notes here. Okay, so as you know, dollar last week has been a bit of sideways. We have seen some spikes. I believe it was mid of the week and Wednesday when firstly Trump, there were some reports that Trump will fire Powell. Then this news have been denied that that Fed will remain independent. So that's when we have seen firstly US dollar coming to the downside with the US yields, because if some new will take Powell's place, then we know that most likely the next person will be looking to cut rates, especially now when Trump is in office. But this news was delayed later, and that's why we have seen dollar coming a bit back. But overall, it's still a very sideways price action on the dollar. It's something that I was afraid of and also warned back in June, because by the way, we are still in mid of the summer, and these summer ranges could resume, could continue definitely till end of this month. As you know, August 1st, maybe that's when we could see some very interesting volatile moves, especially when we'll have maybe some final deals ready regarding tariffs. But till then, it's still a lot of uncertainty, and that's why also maybe the US yields treasuries are trapped in this consolidation. And what's interesting is that basically I see this as a bearish pattern, but even this bearish pattern inside of the range, you will see some bullish reactions. So if you look at the smaller time frame, and we have been tracking these two wave counts with our members quite closely on the intraday basis, and the first wave count basically shows that we are in a wave B within a higher degree wave D that belongs to a triangle. So basically we have a triangle within a triangle. Don't get confused with this. I will get you covered, but what's the point here is that even if you just focus on this kind of a triangle here, it should be structured by A, B, C, D, E legs, right? So at the bottom of this range, we have been warning last week that we could see a recovery, at least for a wave E. Maybe this will be not be a wave B, and something else will take the price even higher, and we will see a breakout. But the idea was that we were expecting some kind of a recovery, and based on the second wave count, which is by the way the bullish triangle, this also suggested that we could see a bit of more upside. And since we are now recovering based on these two interpretations, I think that slightly higher resistance levels could be seen. And I'm just wondering if maybe with that being said, US yields could be pressured a bit lower in the next few sessions. That doesn't mean that we'll see a breakout, and this could maybe allow still some commodity currencies maybe doing much better compared to US dollar. But of course there are some exceptions, like maybe pound. I think that this one is very weak, and that high resistance that can be retested will take us even lower. But the overall idea is that this temporary recovery here based on two wave counts, which still has a slightly room for more upside, this could maybe allow US yields to come down slightly with the US dollar, and possibly we will see a bit of more gains, in other words, on the euro dollar. I'm talking about the short-term wave structure, meaning for this week. I'm not talking about some higher time frames. Okay, now, but when it comes to the higher time frames on the dollar, you still somehow have to realize that we are, in my opinion, in very late stages of this decline. And this decline from January highs, we have been tracking this one very closely. We've been warning about this reversal already back in December, November of 2024, that most likely dollar bulls will see limited upside as soon as Trump will take office. And this has played out pretty nicely, and it's always challenging to find exact bottom or top whenever you have fifth wave unfolding, okay? Unless you have some very clear price action from the highs or from the lows in impulsive price action that will confirm that this is a bottom or this is a top. But when I look at the dollar index and analyze the bounce from that July lows, that's basically a pretty tricky recovery to count and can easily be just a corrective price action. So I'm just wondering if maybe there is another push to the downside coming. Of course, I would not be surprised because we are, by the way, still in the middle of the summer. I don't believe that we will see any flows that will hold through August and September and towards the end of the year. Starting in the middle of summer, I just still think that there will be some both-sided moves, and ideally maybe another push to the downside before we stabilize, and then who knows, maybe Fed will finally cut rates as Trump wants it, but maybe this will be one and done, and you will see a complete opposite reaction. The dollar would then turn higher, like, I mean, it happened very similarly back here in September of 2024, right? So everything moves here based on expectations, but when these expectations will finally be materialized, maybe by Fed that will really cut rates, then the new flows, the market will again change the cycle. So as things stands right now, I really cannot confirm for sure if that's already a fifth wave low or we have a bit room of more weakness. Unfortunately, that's kind of a price action that we see at the moment. I don't want to be too smart in the market and say, okay, that's a bottom, that's a top. I just want more price data, more confirmation from the market, and that's totally fine. I don't want to get blindly focused on my bias, because I just rather focus on the price action itself. Right, so I will just patiently watch what will happen in the next few days. But as I said, maybe we'll have another push to the downside. Who knows, if the US treasuries will really take us even higher here, then maybe this can be the case. But as I said, still we are closer to potentially ending this 5-wave drop. And if you take a look on this chart, it's very helpful. Actually, it's US treasuries and bonds rate differential. So this spread between German and the US yields, it's actually can tell you in which direction euro dollar could move, okay, or what investors prefer. If the US yields will rise faster than one in Germany, then of course investors will rather look for investments in the US dollar. So so in my opinion, this kind of a cycle analysis, if you look here at the bottom where we have this spread, you can basically see that in comparative with the euro dollar, we have some very nice and beautiful cycle going on. And looks like that here back in April, when Trump has announced these tariffs change, this cycle between German and US yields has changed, right? So now the question is, how will this impact the euro dollar? In my opinion, I just think that this spread suggests that we will see continuation to the downside. So I think that if that's really going to be the case, it means that, who knows, maybe the US yields will rise faster than one in Germany, especially if tariffs will really be confirmed, if there will be if there will be then economy expansion, if Fed will still somehow during this phase cut the rates, then this definitely could happen, and you could see that the US yields will rise faster compared to one in Germany, and this could possibly mean that the euro dollar is closer to a potential top. And definitely I would not ignore this kind of a cycles. And on top of that, we have the Elliott waves structure also that could tell us that maybe after, as I said, maybe there will be another push to the upside close to 1.18, but it's really not me to gamble on this final piece of the potential impulse here that could be in very late stages. I don't care if fifth wave was already here, or maybe we'll see another push to the upside. I just think that it's it can be a time that we will see some phase of new consolidation in in the next few months. Now looking also on cable, as you know, cable has been very weak, possibly one of the weakest over the last few weeks since start of the month basically, and this one came very nicely out of this ending diagonal, and looks like that there's still, in my opinion, room for more weakness. And as I said earlier, if we'll see some more rallies in the near term, I think that there will be, maybe will be closer to potential resistance. Bank of England was very clear that they are on the path to looking to cut rates further. GDP data also was showing contraction. So in my opinion, cable could stay weak, and even if the euro dollar would still hold gains, totally fine. I mean, if you look at some of the crosses, here's the euro pound, for example, and in my opinion, this one also has a room for much more upside. Even if you look at the cycle analysis here, this goes to a monthly chart, and I've been tracking this one for the last, I don't know, 3, 4, 5 years, if not more, and it really played out pretty nicely. And at the end of 2024, we completed this bearish cycle, and since we are also breaking this downward channel, I just think that we are now in a bullish phase here, in a bullish cycle. So watch out for potential more upside, and this can also be supported by this Elliott wave look. I know that we are in some kind of a potential ABCDE triangle, so it's maybe it sounds a bit confusing for some who are not familiar that much with the Elliott wave principle, but looks like that we still have some room to the upside towards the upper side of this triangle range. So I think that we could see the 61.8% still by the end of the year. That's also where WXY will equal in lakhs here. So that's the reason why I showed you this, because even if cable can come under pressure, still it doesn't mean that that euro cannot hold gains there. Okay, just a second. Now, since I touched some of the crosses here, maybe it's worth to watch also on the euro Aussie. Now euro Aussie, this euro Aussie and pound versus Kiwi or so, this kind of crosses are very useful whenever we are in a risk on environment, because there will be more demand for commodity currencies. And when you look here at the euro Aussie, we can see that maybe this chart, it's not telling you much, but if we have some more context here, then we can see that basically we broke this trend line support. Let me just hide this for a moment. What's with this? Anyway, or I can just simply delete it. You can see that basically we broke this trend line support back in 2021, then we came very nicely to the upside. And what's probably the most important here when I watch this latest price action is that that was a monthly candlestick. In April we pushed pretty aggressively to the upside, but really actually failed at this trend line and closed slightly lower. So in my opinion, this is not example of how trend lines could work. Obviously will not work on tick by tick, but the closing price actions, closing prices are the most important ones. And then you also have here again the cycle analysis, which once again shows you that we could be at the end of this bullish phase. And then on top of that, you have the Elliott wave principle, which also shows you that this could be a reversal and this could be a counter-trend wave 2 rally, or maybe even just a wave B. Maybe let's not try to predict the market too far into the future, but still we stopped at the 61.8%, so that's fine for a wave 2 or maybe even just a wave B rally, and we could see a potential new reversal to the downside. And if you look here again on these candlesticks, just a second, I lost it, I think. Okay, that's the one. So you can see here that's a weekly candlesticks chart. Okay, and we have seen here an open price around 179.50 back at the start of July, then pushed higher, and then at the first week of that of the month, we basically closed lower, and more importantly, we closed below the previous two candles. So this is pretty nice bearish candlestick reversal pattern, and could tell us that this could be a potential top. So as long as we are here above below that level, I just think that there is a chance for more weakness. Even if you look here closely on a smaller time frame, that's the 4-hour time frame, we have possibly an impulse and a counter-trend ABC rally. Even if we retest the 61.8%, could be a bit more complex recovery, but still this looks like a solid resistance up here that could potentially bring the prices lower, while the market obviously should stay below that level. Above 1.81, I always obviously I would be wrong up here. Traders, by the way, if you love our analysis, please press a like on this video if you're watching here on YouTube or on any other social channels, or just maybe leave me some comments as well. This really help us to bring us higher on the list. So now let's take a look also on Kiwi. Now Kiwi is also making some very nasty price action here. Again, it's summer, so I'm not really surprised. So whenever that's the case, maybe you just don't want to get trapped in this nonsense range, and just maybe just go back a little bit, zoom out and see what's happened there on a higher time frame chart. And there we have very clear recovery after just a temporary break to a new low here below February of 2025 lows. We established new lows in April and then recovered very significantly above very strong resistance, which now could become a very strong support. So for me, the pattern is very clear here in Elliott wave terms. That was an impulse and that's a consolidation. And sometimes it's not tricky, it's very hard basically to say what kind of a correction will this be. Can be a running triangle, can unfold into running flat, into expanding flat, can be even some kind of a combination. I mean, there are definitely multiple value scenarios on the table whenever you have a deal with a complex correction. But the goal is the same. It's a correction, it's a temporary pause, and whenever this correction is completed, the market should take us higher. So because that was the first impulse, after this pause, you could expect that the next impulse will also be to the upside. So that's why we are looking here on this 4-hour time frame. We're looking at potential flat. Maybe that was a running flat that already, who knows, finished here at that lows, especially if we break this channel here out decisively, confirmed by daily closes here, let's say above 0.6, that would be really nice. Then I think that we could see much more upside here later on. So if someone wants to join this trend, then maybe you should focus on a smaller scale intraday. Intraday invalidation levels here are, as long as you are above 0.59, there is a chance that we will see some more upside. It's a very small risk, but if you're more a conservative approach, then maybe just buying into the failures down towards into these supports would make also sense, in my opinion, because that's a pretty big level, and whenever we broke through them, I just would not be surprised to see a reversal, because there must be a lot of stops below that levels, and if we clear them, I just think that there could be a pretty nice recovery later on. Jorge has also joined. Hey, welcome on board. So let's take a look also now on dollar yen. As you know, dollar yen has recently moved very nicely to the upside, but as discussed earlier, US yields, treasuries still somehow trapped in a range. So that's why I also think the dollar yen will not see any kind of an impulsive breakout here. It could stay trapped in a very big triangle, but we are approaching some potential resistance. Okay, so if we are in a triangle, we could see some limited upside around 150, 151. That's the area where we should look for potential limited gains here, but maybe there is not type of the price action where I would look for some kind of opportunities, unless we see us move into that resistance and then we drop in 5 waves from there. then obviously I would seek for potential entries on a pullback. But as it stands right now, I just still think that there is a bit of more room for more upside here into these C wave targets. Also looking at the crude oil, as you know, I've been talking about this in a few weeks back. I said that most likely we have some very important lows, and now the period of consolidation after massive moves to the downside, massive recovery, now some stabilization. But the 4-hour time frame, I think it's pretty interesting, because here we have an impulsive drop, and now you have this potential, yes, A, B, C, D, E, 5 waves in a sideways price action. So I'm basically observing the idea of a triangle here. So that's my preferred scenario, because we stopped at the 78.6% near the $67 here, going back also to this previous minor swing high. So basically this sell-off tells me that this could really be a triangle, but it doesn't make any big difference compared to our past analysis when I thought that wave B has ended here. The idea is the same. That's a correction, that was an impulse. So the next direction, I think it's going to be to the downside. Even if I'm wrong on this triangle count, which by the way, it's just in the middle of the process, and we retest the 68, 69, still that would be a perfect resistance, even if we retest slightly higher prices. But for now, this correction obviously in a wave B is not really completed yet, but maybe a lot closer to the second part of this week, we could see some interesting moves. Now looking at gold, gold is coming to the upside. I've been sharing some analysis on X, so if you're not following us there, make sure to check for our social channels. You can find them all on Wave Traders. That's by under About Us sections. These are all our official social channels. Okay, we don't have any kind of other usernames or anything. If you want to get in touch with us, follow this page. Now we're here. So as I said, we posted some analysis on gold, and I said that most likely we are still trapped in a consolidation here. Now that's a triangle. That's what I think it's happening here. If it's already finished, I really do not have an idea. But what I know is that that's a pretty interesting movement here for the start of the week. And the second thing I know is that usually sharp early Monday flows can be reversed by so-called Tuesday reversal price action. So in the next 24 hours, if we will see a reversal back to the downside to the weekly open, then we will know that that was just a failure and that we are not ready to break higher. If on Tuesday, Wednesday, we will see maybe even with closing price action above 3,420 or so, then I think there could be a chance that we will see more upside this week. But we are still not there in that phase. For now, I still see that 3,400 could be potential resistance. And if we see a failure here, just be prepared on more sideways price action here. And ideally is that we are here either for a deeper wave C, or maybe just temporary for a wave E, if wave C and wave D will end up here. So 3,400, I think it's a pretty damn strong resistance. It's also the trend line here from that connected from the all-time highs. But at some point, of course, because we are tracking a correction, market should move to new all-time highs. There's no doubt about that. So there's still a healthy uptrend. It's up to you how you will try to manage, what happened here, okay? Try to manage the potential, your portfolio, your trade ideas, whatever. But I just think it's a bit too soon to call this as an end of wave 4. But I think it's a wave 4, and that sooner or later, yes, we will break higher. And the reason why I think that gold has room for more upside, here's dollar versus Chinese yuan. And if you look very closely here on this cycle analysis, okay, you can see that each time when we have seen a massive reversal in dollar Chinese yuan to the downside, what happened is that gold see a very nice push higher. So what is the most important, I think, here is the dollar Chinese yuan is basically trying to form some top here, and we are already rolling to the rolling over, turning to the downside. So maybe this break to the upside is really not that far away, could occur in the next few weeks. But when it comes to the Elliott wave principle, as I said, maybe that triangle does not have all needed subwaves yet. But based on this interpretation, even if we just see slight push to the downside here on dollar versus Chinese yuan, I just think that here, obviously, at some point, gold will also follow to the upside. Even if you look at the daily chart here of dollar Chinese yuan, maybe that's some kind of a fourth wave consolidation right now, and we will see push to the downside. At the same time, when this happens, gold will break higher. Okay, now let's take a look on the S&P 500. So the S&P 500 is trading at new highs, but if you look at this maybe smaller time frames, we can count 5 waves up on that cycle from that wave 4 low. So maybe we'll start moving into some kind of a resistance when there will be even more uncertainty, confused news details from the media regarding tariffs. But so far the market looks pretty nice, very good. Also, what I would like to mention that is, if the August 1st deadline will again be moved to some new dates, then I'm pretty damn sure that markets will try to ignore this and they will just keep moving to the upside, because these deadlines have been moved so many times till now that no one would really care about new deadlines, or at least markets will try to ignore them. Okay, because no one really knows what to trust then. So I just think that whatever happens on August 1st, this will potentially define some interesting next moves here, but maybe there will be some time for our retracement. If the flows will change, then flows can only change to the downside, or at least for some temporary period of time, if you consider that the current flows are definitely bullish here. But I would prefer, maybe if you're waiting on some retracement, then watch out for this wave 4 dip into this wave 4 supports. That would be very nice. It could be very quick sharp wave 4, which usually happens on stocks. You can see a very sharp, just few days last correction to liquidate the weekends, and then you see market coming back to the upside. So you just have patiently wait on this wave 4 unless you're already in that, then that's fine. And the reason why I think that this wave 4 could possibly show up, if you look at this seasonality S&P 500 index chart, you can basically see from equityclock.com, that's the source, and we are here, you can see, in a very nice run usually for the most of July, and we are now approaching end of the July, some limited upside, and then August period of consolidation. So that would go hand in hand with the Elliott wave principle here, right? So I just think that if we see this kind of retracement, that would make total sense based on this, and then maybe later on we see, who knows, maybe Fed will cut rates. Before that you see a drop, and then markets will rally. Now let's take a look. Also, we have some few charts of stocks, and then let's go to a few charts of cryptos. And before we go to some of the stocks, just let me remind you that we have the stocks beta version, right? So that's completely free access. You just have to register here on our website. You go to the plans sections and you just activate free access, and you will get all of these big names that are covered in our services. And I will prepare a new report this week. We sent last week some video update, which is also here, so you can see the video update here and the past reports here on the in this tab, where the new report will also be uploaded. And if we take a look here, if we take a look at Berkshire here Hathaway, you can see that this one has a very nice ongoing recovery, and I think that ahead of earnings here that will be released in August 1st, we are coming into very nice potential support. So that's a very nice healthy uptrend that I don't want to fight, obviously. And also what I really like is that we previously came out of this triangle, we made this high here, and now potentially have a deal with a flat correction in a wave 4. And why I think that this could be a flat correction? Because here that was a free wave move to a new high, and the structure of a flat correction is that's a wave A. You see a 3 waves move up in a wave B that can complete itself somewhere around the area of a wave A, and then you see wave C coming very close back to this wave A termination point before market reverses higher. So that's called a flat correction. And why I really like this interpretation in general is because traders that want to play the breakouts are usually will usually find themselves on the wrong side. Okay, because here the breakout didn't work, then market came to the downside, it stopped them out, then market comes into that area, then some will say, okay, I want to short this market because it has stopped, it will continue to the downside. Then on the opposite side of that, you have some traders that are still holding these longs and have a stops down here as well. So that must be some very nice, interesting liquidation pool down there, where potentially we could see some very interesting stabilization. And in Elliott wave terms, because we have this flat, I think that wave C could come into some very late stages here of this decline here. So I really like how this structure looks, and I will keep a very close eye on this one, and will make sure to also include it in our stock report as well. So make sure to register, and you will be notified whenever the new report will be uploaded on our page. Now, if we take a look also on Coinbase, so Coinbase has made a very nice explosive move to the upside. We've been covering this one in the past, but you have to realize that we came back into that area from 2021. I'm not sure if that was the highest price, because maybe some history is missing here. If someone can check or confirm, that would be nice. But overall, keep in mind that we are at the 200% extension of this wave 4, and that's the typical target of wave 5 when it comes to fee projections for a fifth wave. So possibly there could be some slowdown. We could see some correction. If someone is long here on this one, maybe not bad idea to book some and let the market done the rest. Also, if we take a look also on Netflix, there were earnings reports last week, but still Netflix came to the downside despite better than expected numbers. And what I can see is that there's also a very nice healthy uptrend. And again, if you're looking for some kind of opportunities within this trend, then you want some deeper retracements, right? And maybe this one is already underway. Not completely sure about that, but if we see another 10% of a pullback, that was the previous swing high, this could be a very nice wave 4 then, and potential opportunities could show up into wave 5. Of course, if you wish to look for some maybe more multiple entries and add to the positions to get the better average price on the upside. But overall, this looks very nice, and as I said, if we see this wave 4 pulling back, I just think that it could be coming into some very nice support. I will also include this one in our report as well as a lot of others too, obviously, that we have listed here on the right page. Okay, now let's take a look on, that would be Bitcoin, Ethereum, and Ripple. So Bitcoin, still some consolidation going on. We broke here this base channel pretty aggressively. Now we tested this upper line twice, so I would not be surprised if slightly lower line will be retested here. It's a midline. So I think that the very nice support is here, 15,000 up to 116,000. Even if we stay sideways for kind of a triangle, that's a very possible. But in both scenarios, I just think that there's a bit of more room for gains here, while the market is holding here above the previous highs. Also, if you look at Ethereum, this one completely took over the Bitcoin. As you know, I've been warning about this, especially because Ethereum dominance was showing a pretty nice a pretty nice reversal here from that lows, and now we are just making a massive moves to the upside. So Bitcoin at these highs, some are looking to move money from Bitcoin into some other alts, obviously taking advantage there from lower prices, and this is now visible through those charts. But when you look at the Ethereum, we've been looking, as you know, for this head and shoulders bottom formation. That was a breakout. We just completely moved sharply through this futures gap. Head and shoulders target is still a bit far away, but keep in mind that we said that usually in Elliott wave from an Elliott wave eyes, you should watch for C2A target. This one has also been broken, but now if you look a little bit back, check out this trend line connected from all-time highs. Okay, so we could maybe slow down a bit up here. If someone is long here, maybe just, I'm not saying longer term, maybe short term, and looking to looking at some levels, that's certainly a zone. Maybe some will be looking to adjust some of their trades, but overall, after some retracement in the near term, we could see a bit of more gains, because I just don't think that this impulse here from that June lows is really completed yet. Even if it's that wave C or some part of a higher extended wave 3, still there could be more gains after pullback on dips, obviously. Now let's take a look also on Ripple. This one, as you know, is making some very nice recovery as well, and even this one shows that we could see a bit of more upside. Here we are in a wave 4, and I think that trendline support around 3.3 could be very nice and interesting for potential more gains. But as we go closer to $4, just keep in mind that there's where the first big target could be met, and maybe there could be some retracement going on. Keep in mind that we are very late stages of the higher degree cycle, and if you've been holding Ripple for the last 2 years, even more, maybe you just don't want to risk too much going in this kind of a phase of the sentiment. Okay, maybe you just, that's at least my style, maybe you just want to take something off and let the market done the rest. Even if it goes towards 10, 15, whatever, you still, the important is to book and to make money, because until you book, you don't make money. Okay, traders, I hope that you enjoyed this presentation. Please, once again, press a like, subscribe to our channel, visit us at wavetraders.com. We have all of those markets that I just covered, and a lot more in our under FX currencies, under crypto services, and as you know, we also have launched stocks as well. So make sure to visit us at wavetraders.com. I wish you good luck this week and talk to you soon. Bye.